Tesla stock is down about 4.5% today, following this epic rally that we have seen in Tesla, the best day in over 3 years yesterday. I'm not super surprised, but it is somewhat surprising because there was good news today. So what's going on? Before we get into all of the news specifically for Tesla, I don't actually think this 4.5% drop today has anything to do with Tesla specifically. I think it has to do with the data that came out today and what came out yesterday, and I'll share that with you in just a moment. But keep in mind, Tesla is going to be volatile. Shorts are in a bad position. They've lost $5.5 billion in 4 days. They're either doubling down or they're going to start covering on short positions. And it's kind of like the meme stock era. If you remember that era in 2021, stocks would go up 20-30% in a day, come down 10-15% the next day, and then continue on. It just changes into a more volatile stock, and that's what Tesla is now. And I'm expecting larger moves to the upside and to the downside. And we've seen a large move to the upside with yesterday's best day since March 9th of 2021, over 3 years. Well, I'm expecting a lot of upside and downside volatility from here. Also important to keep in mind, we do have big earnings coming out today in after hours, some data coming out tomorrow, as well as the Fed, but we'll talk about tomorrow a little bit more in the next video coming out at 8 p.m. tonight. So the first thing that is affecting the markets today, keep in mind the NASDAQ is down over 1%. So it's not like the markets are doing well today. The NASDAQ's down over 1%. The Russell's down 1.5%. And some of this could be due to the news that we got yesterday towards the end of the day that sent the NASDAQ down about 0.5%. You ended up recovering into the end of the trading day yesterday, but it was that the Treasury is expected to sell about $41 billion more bonds, or worth 41 billion worth of bonds more than we thought previously, and that's not great. And they're expecting to sell about 50 billion more than we expected through the July through September quarter. And I think this is having some effect on our markets today. If you take a look at 10-year treasury yields, 10-year treasury yields are up 5.5 basis points today, and that's directly correlated to the Treasury selling more treasuries. We did have some very, I'll say not great data, kind of head scratch data, makes you kind of wonder what's going on here. You had the employment cost index for quarter over quarter, the benefits at 1.1%. The estimate was 0.7%. Employment cost wages quarter over quarter came in at 1.1%. The estimate was 0.9%. And employment cost index ECI, this is what a lot of people have talked about, came in at 1.2%. The estimate was about 0.9%. So all of your ECI data came in hotter than expected. And that's not exactly great for your whole wage price spiral argument. You had S&P Case-Shiller home price month over month that came in at 0.9%. Estimate was 0.6%. And then S&P Case-Shiller home price year over year that came in at 7.3%. Estimate was 7%. So kind of across the board, at least the data that came out in between 8:30 in the morning and 9 in the morning came in kind of inflationary. Not super important data, but still inflationary nonetheless. Now, here's where things kind of turn into a little bit of a head scratcher. So at 9:45 in the morning today, you had Chicago PMI that was expected to come in around 44. It came in at 37.9. So Chicago PMI, economic activity around Chicago, came in a lot weaker than expected. CB consumer confidence that came out at 10 o'clock in the morning today came in at 97. The estimate was 104. That's a big miss there as well. So consumers not feeling as confident. And then you have the Dallas Fed Services Index, services being a sticky part of inflation in recent months, came in at negative 10.6. The estimate was negative 5. Dallas Fed Services revenues came in at positive 0.3. The estimate was positive 3. So big misses here for service data, for consumer confidence, but beats, if you will, to inflationary data. So this is kind of stagflationary, if you will, high inflation, weakening economy. That's like the worst possible thing that the markets could go through. A period of stagflation is not good. Now, do I think that's happening? No, but that's kind of what the data pointed to today. And I do think heading into the Fed, that is a reason for markets to sell off and act very irrational. Now, I'm not going to make the conclusion that markets are acting rational or irrational based on this data. I'm just going to say, if this was any normal day after the Fed or 2 weeks ago, any other day besides the day before the Fed, the markets probably wouldn't have reacted. Negative 1% on the NASDAQ, negative 5% today on Tesla based on this data. Like, it's not the most important data, but markets took it as important today. So you have some data that's suggesting a stagflationary environment is here, and you did have that news yesterday and after hours that you are seeing the Treasury that's going to sell more debt than we previously thought. That puts upside pressure on yields. You are seeing 10-year Treasury yields up about 5 basis points today, heading into the Fed, and boom, you have a bearish stew combo cooking in the crock pot, okay? That's what's going on today. I don't think anything is Tesla specific. The reason why Tesla's down 5%, there's nothing I can say here that would suggest Tesla had bad news or there's something we don't know about. In fact, there was actually good news today. 14,800 new Teslas were insured in China last week. As Gary Black says here on X, he says, quote, solid China weekly insured registrations of 14.8 thousand for the week of April 22nd through April 28th. After 4 weeks, Tesla China's second quarter is negative 20.6% quarter over quarter and negative 9.1% year to date, year over year. And now, the fact that Gary Black says this number was solid, I'm just going to go with his, kind of interpretation of this, because I don't know what the actual estimates were. There's really not official estimates that come out by Wall Street for each individual week, but he's saying they were good. So that's good. And when you look at prior years, it is good, right? Insurance registrations came out 14,800. Last year during the same week, they were 11,500. And back in 2022 in this same week, they were 1,330. So that's definitely a better number than last year and a way better number than 2022. So I would say this is a solid number as well. One of the higher numbers we've seen for all of 2024 so far. The only higher number we've seen for weekly insurance registrations was the last week in March when you came in at 17,300. So this is the second highest week of insured units. I don't think this is a negative piece of news for Tesla. In fact, this is probably very positive for Tesla. Thus, I don't think this is the reason that Tesla is selling off today. So this was actually some very positive news that came out last night for Tesla. It says Tesla has secured a new $650 million contract to build the largest battery energy storage system in Australia, over twice the size of the storage system pictured below. That is a big contract for Tesla. And just, look at the size of this. It's double this size. Wow. Yeah, that's really good news for Tesla's energy business. Morgan Stanley's Adam Jonas just put out a new note on Tesla FSD Supervised. He says, quote, I've been using FSD 12.3 heavily over the past few weeks. This past Sunday, I used it for more than 70 miles of driving between kids' soccer and lacrosse games in Westchester County, New York. I reckon I had FSD engaged for easily 90% of the day's driving. The system is a pleasure to use and reduces my overall fatigue level. There's still a long way to go to remove the steering wheel, in my opinion. Transparency with the safety data with third-party validation will be a critical milestone for achieving deployment. So he sounds pretty bullish on full self-driving. XPeng's CEO just said he welcomes Tesla FSD to enter China. He says Tesla has very good self-driving technology and a brand. He says only when more good products and technologies enter can the entire market and customers have more good experiences and the market develop and accelerate in a more healthy direction. Moreover, China is vigorously promoting openness plus new quality productivity. I think whether it's Tesla's FSD, XPeng, NGP, or Friends NOA, these are one of the one of the representatives of new quality productivity and should be supported to let 100 flowers bloom. And apparently Tesla has a big spring software update that is now rolling out to Tesla owners. Mercedes earnings plummeted 34% in the first quarter, weighed down by model changes and sluggish demand for its EVs. Volkswagen on Tuesday said its operating profit dropped by 20% in the first quarter as weaker demand for its premium brands drove a drop in sales. And we do have reports that FSD supervised V12 0.3.6 is currently rolling out to more owners in North America. And last but not least, for Tesla specific news today, you do have Tesla short sellers that have lost $5.5 billion in the last 4 trading days. Even with today's 4.5% drop, that number's still over $5 billion in net losses. That shorts are still in a very bad position. You can see here on the day today, it's kind of equaled out. You have return shares of 2.23 million, borrowed shares of 2.25 million. So you actually have a net short position being taken out today of about 19,000 shares, but that's really nothing in the grand scope of things. You have short interest of free float sitting at 3.84%, $20.68 billion now in short positions with 106.56 million shares that are currently sold short. There is still a lot of shorts that need to cover on short positions. Option activity today from big money in Tesla options is pretty dang positive. You have 190 orders totaling about $30 million with a positive order value of 61%. Volume today is 54.06% to the call side and 45.94% to the put side. So more calls than puts being bought. If you look at the entirety of big money, these are hedge funds, institutions, money managers, and you look at retail, people are net buying more calls today that expire by this Friday. So some short-term options trading is definitely taking place here to the bullish side by the end of this week. And just if you look at overall big money, they're pretty dang bullish. I would say they're even more bullish than retail investors right now. 61% of orders being bullish today. Tesla is currently running about 4,000 different ads with Google. The percent of stocks above their 50-day moving average is falling a lot today. 6.2% of stocks are breaking under their 50-day moving average. You're only at about 37% of stocks above their 50-day moving average. So I do think over the next couple of days, specifically tomorrow, there's going to be a lot of volatility. Okay, and you're kind of already in the dumps, right? You're already sitting at basically where you were towards the end of November as far as how many stocks are above their 50-day moving average. So I think the markets are already in a pretty pessimistic place for the average stock. I think even today and after hours, when you get Supermicro, AMD, and Amazon earnings, that's also going to be a big catalyst for especially your AI trade, clearly, and your other big tech names. Amazon will also give us a glimpse into the consumer, and I do think some of this market weakness is the market saying, hey, maybe the consumer's not as strong as we thought, with, again, consumer confidence falling today and some of the stagflationary data that we've seen today. If we take a look at inventory numbers for the Tesla lineup, you could see the Model Y just really trending around 6,700, which is in a lot better place than you were previously when inventories were almost 10,000 for the Model Y. So definitely looking a little bit better there. The Model 3 stair-stepping higher, considering the production problems we seen in Fremont last quarter. That's actually a great sign to see Model 3 inventories rising now to about 2,600, whereas last quarter you were sitting at less than 1,000. So that change would represent maybe there's more production taking place of the refreshed Model 3. So that's great. Model X inventory is at about 2,400, recently spiking a little bit, but staying overall pretty flat ever since about the beginning of April. And Model S inventories are staying like literally unchanged every single day. Falling a little bit here recently from 1,300 down to a 1,200, but still nothing that is alarming. It's actually alarming when you see inventory numbers rise like the Model Y has, or that suggests there's more production of specific models. But I think we're in a pretty good spot right now. Something I have been watching very closely is Google Trends data for full self-driving. So again, you used to trend anywhere from like 10. You have an 8 number here on the low side up to the high side of like 16, 18, 20. It's pretty rare you ever, have gotten to 20 in the past. You're usually on the high side at like 18, right? 16 is pretty high as well. So in between like 8 and 18. Well, you've obviously spiked. That's clear. You went to 100. You fell down to this low of 39. Then you went back up to 47. Now you're at 46. The higher this trend data stays, the more continued search activity full self-driving is seeing in Google, and likely the higher the take rate ultimately is. So the higher this is, the better, I would say, for the take rate. And right now, it would suggest the take rate still doing pretty dang good. Google Trends data for the entire Tesla lineup has been spiking really alongside the Cybertruck. I think you're starting to see the initial rounds of the halo effect. The Cybertruck is now the most searched product for Tesla over the past 12 months. You have the Cybertruck sitting at 55 on Google Trends, and I'm looking over here at the average. The Cybertruck is now at 25. The Model Y at 24, the Model 3 at 24, the Model S down here at 10, and the Model X down here at 9. But right now, the Cybertruck is at 55, the Model Y is at 29, the Model 3 is at 25, the Model S is at 12, and the Model X is at 9. So you recently seen this larger spike. This was the week of April 21st through April 27th. It looks like search trend activity is falling a little bit, but I want to keep in mind that this is typically not the season in which you see a lot of demand for Teslas, right? That's really Q3, Q4. And these are the best trend data, that we have seen in a long time. This was better trend data than even you've seen in Q3 and Q4 of 2023. So I think that sets us up for a very strong end of the year, especially if the Fed does start to cut rates. And we'll know more coming tomorrow. Over on StockTwits, believe it or not, sentiment for Tesla is actually higher today than it was yesterday. Today you're bearish at 44. Yesterday you were bearish at 35, which is just strange because yesterday was Tesla's best day in 3 years. And today, Tesla stock is down 4.5%, and people are more bullish today than they were yesterday, which I think this just highlights to me, and the reason I look at this is because I'm a contrarian. If everyone's bullish, then I think, hey, this may be like the top. Whereas right now, even retail investors are still bearish on Tesla. So I don't think the top is in until people are extremely bullish again on Tesla. I think you should be extremely bullish on Tesla. My personal opinion, just given what we've seen with earnings and, well, since then, we've seen a lot of good news. Elon Musk is back in charge of the ship, and that's a big deal. Metaphorically speaking, he was never gone. Quite literally, he's always been the CEO, at least in for a long time now, but he wasn't doing things to create shareholder value and to really better Tesla in an obvious way to the markets, and now he is. So that's why I say he's back. He was never gone, but he's back in that sense. Message volume today is at 55. Yesterday it was high at 62, so a little bit less message volume today, which makes sense considering the stock is down 4.5%, and the participation ratio today is at 54, which is considered normal. CNN Fear and Greed Index is higher than it was 1 week ago. 1 week ago, you were at 39. Today, you are at 42. Yesterday, you were at 43. So a little bit more fearful today than you were yesterday, but like literally 1 point, just a smidge. You're pretty close to being neutral, which suggests to me that maybe there is still more downside if the Fed doesn't go the way we expect. If the earnings don't go the way the markets expect, it's not like you're extremely fearful right now. And again, this is your earnings lineup for today and after hours. Amazon, AMD, and Supermicro, these are your big guys. These are the stocks that can move the markets. You have Starbucks, Riot, Pinterest, Caesars Entertainment, Root, Lemonade, and Anuk as well. Tomorrow, you will have Pfizer, CVS Health, Barrett Gold, MasterCard, Norwegian Cruise Line, Kraft Heinz, Estee Lauder, Marriott, and Aris in pre-market. And then in after hours, you have Qualcomm, Devon Energy, Paycom, Carvana, Fastly, Etsy, Sonova, and Albemarle. As far as Tesla stock on a technical basis, I would love to see Tesla close above 188 today, the last, hour or so of trading, because these videos are filmed before markets close, can be pretty aggressive in, either direction, the upside or the downside. So if we can get above 188, that'll be great. If not a huge deal. I think we'll find support around 180, 181 if we don't. And if there is more downside in the markets. But again, like I said in the beginning of this video, I think things are going to be very volatile for a period of time for Tesla now. And I expect big swings, to the upside and to the downside. If you take a look, though, at the RSI is back down from 66 to 59, and that does pave the way for higher prices from here from a trading perspective. You want to reset that RSI, and that's why you get consolidation periods for the stock to ultimately go higher. Now, the MACD over the last 2 days has really started to rise, rising even more today. You're almost positive here on the MACD line at negative 0.06, so probably even today you could go positive there, and that's a pretty good trading signal as well that higher prices are coming. Like, that MACD line is pretty much vertical, and anytime that happens and you go positive, it does tend to lead into more upside. So I am pretty dang bullish for the Fed tomorrow. If you did not already know that, well, watch the video coming out at 8 p.m. tonight. I'll explain exactly why I'm bullish and why I think Tesla stock is going higher still throughout this week. Let me know what you think about this down below in the comment section. Hit the like button as well as subscribe to the channel. If you guys want to come trade with us live in real time, check out that link down below in the description of this video to join the trading community. You guys have a fantastic rest of your day, and I will see you in the next one.